Heute gibt es auf dem Kanal direkt das nächste Highlight, denn ich war gerade hier oben und habe mit einem chinesischen Hedgefondsmanager gesprochen. Der war schon mal auf dem Kanal. Das Video kam bei euch super an. Ihr habt aber gesagt, hey, wir brauchen mehr Aktien, in die wir investieren können. Und er hat heute geliefert. Er nennt euch einen KI-Wert, den selbst ich noch nicht kannte, der aber im Value-Bereich anzuordnen ist. Ganz, ganz starkes Unternehmen. Und er spricht darüber ganz viele interessante Themen, wie zum Beispiel, wie war dieser Hedgefonds jetzt bei dem Handelskrieg investiert? Wie verhalten sie sich jetzt auch zukünftig? Wie sieht er China und die USA? Wie sehen auch die Chinesen Trump? Wie bewertet er die aktuelle Situation bezüglich Stimulus? Wie geht es in China weiter? Super interessante Themen. Er hat richtig geliefert und all das gibt jetzt ein Video für euch. Los geht's. Good morning, Xin. Warm welcome. Actually, this is my channel, but I'm here in your office. So I say thanks for having me here in your lovely building here in Shanghai. You have been actually my first guest on this channel ever a while ago. Back then you were already here, but I was in Guangzhou today. We're in the same room. That's exciting. How have you been?
Very good.
Yeah?
Yeah, very much welcome here. Yeah.
Yeah, it's great to be back in Shanghai. Actually, I haven't been here in 7 years.
Wow.
Before I've been here very frequently, but recently I've been to other places in China. So also for me, it's quite
You got to take some time off. Visit Shanghai.
I should, yeah.
In 7 years, it changed a lot.
It has.
Yeah.
The whole China. So, and not just China, but also the whole environment. Even since we talked last time, a lot has happened. Especially, I would say, the trade tension were in focus for investors like us. So how have you been going through this time of this trade tension? Have you been fully invested, or was it even a time where you say, actually, it was really relaxed for me because there's not much to do when these things happen? What was your mode?
Wow, not relaxed at all, I would say. If I have to summarize, I would call the actions that I took will be classic right decision, but brought not so favorable results. I can tell you exactly what I did. Even before early April announcements that were made by the U.S. administration. So we knew there were lots of tariff-related policies that's going to come. So we start to pare down our positions that's exposed to exports.
Okay.
And by the time we get close to the early April announcement, we pretty much got down to zero.
Okay.
And only the export names. And as you know, after that, most of the U.S. rebounded, and those names that we sold down in China also rebounded. So that's why I said earlier, it's we feel it's the right decision to sell those names as the uncertainties came. But clearly the market didn't see it that way, at least in terms of the progression of the stock price. Most of those shares came back.
Did you even short the market as a hedge fund? Did you try to do that, or was it like too risky?
Yeah, it's too risky. It's not about certainty of these, these tariff policies where we see these humongous negative effects coming. It's the unsureness.
Yeah.
In fact, today, I don't know if you saw the news. There was some resolution on the Vietnam tariff, and all the names that was associated, the Chinese stock names that's associated with Vietnam, meaning they have factories in Vietnam that's exporting to the U.S. They all rebounded in large percentage.
And it was a very strong sign today, actually, for a lot of Chinese.
Yeah, so that's exactly what we did. We thought it's prudent to sell down the export names. Fortunately, those were not, it did not constitute a large part of our portfolio. So naturally, by selling these names, our entire exposure came down a bit, and we did not touch the other names.
Okay. Yeah. How do actually the Chinese or US investors see this whole, let's say, tension between America and China and also with Trump? I mean, we don't have to comment specifically on Trump, but how do Chinese see that? Is it something that say, okay, we saw this coming anyways, for us, whether Trump or another guys in the office doesn't matter? Or is it like it was unexpected? Or is it like some Chinese even say, oh, it's maybe good because they have this like thinking of like make or shuai luo, maybe it's failing anyway. So how do the average Chinese see that whole
the average Chinese sentiment is kind of, waved by the mass media, right? Which has a lot of messages, what you're referring to. But I think from the government's point of view, which they made a lot of similar comments in the media, which is, okay, we have differences, but when we start dealing with each other, we need some framework and certainty when we talk to you. And they did not get there at the initial stage, right, in the month of April. And for people in our business, not only the stock operators, like the exporters and all that, I think there's two mindset. One is clearly they're afraid, they want to deal with this. They know it's a tremendous of negative pressure coming. And on the other hand, because all the announcements from Trump was, 90-day delay, all kind of these kind of announcements. So what they want to do is to push all their products within the 90 days. All they think about is take what you have now and do whatever they can in those limited time. So in fact, coming back to the stock market, at the announcement in April, people know that the first quarter is not affected, right? And people will assume second quarters will be affected. But nowadays, if you ask people, they will think it's going to get pushed back to third and fourth quarter. Because for the various 90-day delays that was announced, people are pushing the products through the channels, try to fulfill maybe half or even 1 year's of order through this time period.
Yeah. Okay, it's interesting. Let's move a bit to, let's say, the stimulus or the economy in China. Many people claim China's not doing enough. Some people say they can do more. Some say they don't want to do more. How to read let's say, from an Western perspective, how to read like stimulus, how to understand what's going on. Like the mainland actually has been underperforming Hong Kong this year, which is quite rare. Yeah. So some would say that maybe there's a lot of skepticism in China and international investors are not really well informed. How you see that and how can we understand which stimulus? Because there is actually a lot of going on, which is really relevant, which really matters for our investments. How do you evaluate?
Well, the Hong Kong relative performance over Chinese Asia's year to date this year is somewhat different from the stimulus question, right? So let's address the stimulus first. I think the stimulus, the most visible ones are still Jiadian Xiangxiang, which is, the white goods going to the third, fourth tier city. And I think the EV stimulus is still there, although it's old. So we haven't seen anything new on the stimulus front. I'm sure the government is cooking it. Whether or not there's anything drastic that's going to come, I don't have any visibility.
They expect more for the second half of the year.
I don't know.
Okay.
But I can share a little anecdotal story that I experienced and I benefited from this stimulus.
Yeah.
I actually recently bought a Apple earphone for my daughter. It was happened in the Shanghai branch of Costco. It was not planned. I didn't, research online or anything like that. We just went shopping and we saw the sign. Whatever Apple earphone, the price is standard, but there's a 国补, which means stimulus subsidy payment from the central government, right? And it was 15-20% discount, which was great. And also, when we bought it, I wasn't sure about whether I buy it and I claim the 15% discount payment or all that. And the store told me this POS terminal, this handheld terminal, is stimulus ready. You swipe, you get it right away. And that was the little story I want to share. Okay. I was, I wasn't sure when I was buying it. So they swiped it, and they showed up. It was discounted price. And I think the entire system is streamlined because I want to ask for a proper 发票, right? A Chinese style receipt.
Yeah.
And they said, we cannot give it to your company. We usually, for reimbursements, you get a company a title, right? They said, I can only write down 个人 because all these stimulus are targeted to individuals.
Yeah.
So that's my little story. It's streamlined. It does happen. And, it's quite prevalent. It's everywhere,
Yeah, I think it's really important and good to see that these subsidies work. It took some time, but now you can see also actually on the ordering platforms from JD, from Alibaba, Taobao.
Yes, yeah.
I made it one that it works, and that's important. Yeah.
Yes.
Whether there's subsidies is another thing, but at least it shows that Chinese are consuming again. And there are a lot of incentives which are used, and that's positive. It means if the government wants or needs to, they can. Yeah. They have leverage.
Plus, it's streamlined. It's very important, right? It's not like you're collecting things and collecting, discounts afterwards, right? It's really, it happens and it's automated.
Yeah. So let's go actually to some of the e-commerce players, or maybe not, because my question is, as a hedge fund, how do you invest? Are you really going also more mainstream, but you maybe weight certain sectors higher, or you really only go for smaller stocks and try to have a really broad mix? So how do you see it? Because we often say that the big international investors, they only go for the big ones because they don't know any better. Yeah. So I'm interested, a Chinese hedge fund, how do you operate?
Yeah, and I think I mentioned in the first video as well, it's one of the edges that we have. That is, we leverage lots of technical tools to do the initial screens for us. Mm-hmm. And when we do the screen, obviously large companies gets filtered and smaller companies gets filtered as well. Yeah. So we are market cap agnostic, also industry agnostic. But historically speaking, when we do build the portfolio, and after all the due diligence, what we left with are usually the big companies, because they are the market leader. They have market share, they have margin, they have growth. The criteria are the same. It just happens to be these strong companies grow over time, and they happen to be larger companies in our portfolio.
Does the bad sentiment recently, for instance, with the competition influence your behavior? Because, you see Meituan, JD, and so on. They have strong growth, but investors are really cautious because also of the headlines with delivery business and stuff. I'm actually very optimistic. I analyze these companies, but of course I see the market as well. Yeah. And these other big companies, and they're growing. So actually, this is we say, it's a no-brainer, but do you have any concerns, or do you react to that kind of sentiment?
Yes and no. To us, the size of the business is the result. We don't use that as a screen. And if we find two companies, one big, one small, the criteria is to compare which one we pick for our portfolio. It won't be size. It's coming down to other qualitative ones as well. The margins and growth and all that are also qualitative ones, where we use our private equity mindset to gauge how they will progress going forward. So it's size really doesn't come to our mind that much, except I have to be transparent that in our portfolio it happens to be larger companies.
Yeah, with size, I was more referring to they got the market share, so they have strong positions. Let's take Meituan, company which I say I like the company, but I think it's pretty strong. Yeah. And the stock price is really performing poorly, especially when you see this potential. Sure. Because of the fear of many investors. So
Meituan, our thinking on Meituan, we like Meituan, by the way, a lot, because for local services, they pretty much have monopoly, right? Beautiful company, but they are doing one thing that we have. We are a little bit reserved on the most recent expansion that they are having, which is going overseas. The central government wants Chinese companies to expand beyond China. And for Meituan, obviously they're doing superb job in China. The type of skills they can take wisdom to a foreign country, it's very different from like a Pinduoduo. So it's a local service, right? You need a rider, this kind of hard resources, it's very difficult to replicate in a foreign country, which is new to Meituan. So we are a bit reserved on their expansion plan. We hope they're not doing it for the sake of delivering, revenue growth, for example. So we are very carefully watching it for the next few quarters on this front.
This is why they're starting out in the desert first in Saudi Arabia with cautious approaches before they go big. But
plus, I'm sure you know that the Jingdong JD announced they're going to go head-to-head with them, which is also not very helpful.
That's what really scared investors away. And it was interesting for me to come here back to China because before it was just blue and yellow. When I was in Hangzhou last week, suddenly there were some red points and Jingdong was there, suddenly out of nowhere.
So that's not it's not a positive thing for Meituan.
Let's maybe go to some smaller caps. I think in Germany, we have a lovely word for that, Nebenwerte. I think the Chinese term, I looked this up actually, it's like 中小in English, it's just, I think, small and mid caps. And last time, your interview was really well received, where some people say, hey, Eric, I cannot invest in mainland. And so maybe today you can share one stock that is listed in Hong Kong that is a bit, let's say, unknown, and only a hedge fund will tell you.
I actually have a few names. I can share one if you like. We can dig more so your audience can be happy.
I've got time. Let's see.
There's too much Asia was discussed last time, so they couldn't pull the trigger on any of them. So yes, we found this one stock we thought is a very good play on AI. As you know, the entire China after the DeepSeek moment. Lots of companies caught the wave, and there's a lot of company that double, tripled in terms of stock price. So we are value investor, right? So it's really, really difficult to find value within the AI space.
That's true.
But we were very lucky to find this one company that clearly their value, but they are not, blue blood AI, but they're going to get benefit from this AI trend. The company is called China Services. The ticker is 552 in Hong Kong. And they actually do telecom back-end services. So facility services, built out for carriers, network maintenance, low-end jobs. Their margins not very high. Their shareholder, obviously, as you may have guessed, are the state-owned carriers. The largest is China Telecom. China Mobile is also a shareholder. China Netcom is also a shareholder. And one of their biggest business is actually build data centers for these carriers. Now, people may know Ali Cloud is the largest. Actually, it's yes and no, because all the carriers together, they have a much larger market share together, right?
Okay.
So maybe slightly over 50%. Plus, carriers have much, much better location, right? Because it's legacy, right? In fact, on our street, Jiangsu Lu, if you walk maybe about 2-3 meters, you're going to see this non-descriptive building with no windows. Okay, that belongs to China Telecom. It's one of their operation center. And many of the floors are now converted into data centers. So they have much better location. All the cloud players that you know of, the new names, they're outskirts, right? They're in the suburbia, right? They're not in the center of the Shanghai, for example. So they do have advantage. And this company, China Services, simply does all these services that I described to you. And the growth driver will be doing all these data center services for these carriers. And there will be the orders that they get will be above and beyond all the normal business that they have. And this is a very stable business because, without this AI-ness, there will be single-digit growth. Margin is low because it's a service provider. But at the time of our entry, they were below cash. That's a very simple definition of value share.
It's really rare in the AI field.
Yeah,
it's like
so it has came up
almost.
they have came up a bit still. By EV/EBITDA, P multiples, I think it's still cheap.
That's very interesting. By the way, guys, this is no financial investment advice. Do your own research. Make your own decisions. But this sounds pretty interesting to me. Definitely, Let's maybe finally, what do you expect of, let's say, the overall market? Because there was this moment this year when DeepSeek basically showed up out of nowhere. The US was a bit in decline, where maybe people thought for the first time something is going to happen, what many people were hoping for, Chinese investors, that China is really sustainably outperforming the US, that China really has this moment because China has the growth. Now we saw there is the potential in technology, innovation. Suddenly also China, I think until now, is perceived more positively globally. We see clearly that China, the sentiment is actually better if you also look on geopolitics. But now when we look at the stock market, Hong Kong is doing okay, mainland is doing not so great. The US is now strongly coming back. We don't know, it can change any time. But how do you see, we don't have to go for 10 years, but how do you see, let's say, the next 12 to 18 months, where do you see Chinese stocks?
Okay. Your question is very good. It actually addressed a bit of your previous question about how Hong Kong has outperformed the A shares.
Yeah.
So I could touch upon that as well.
Good idea.
So actually, I shared yesterday, I think, maybe day before yesterday, I shared a screenshot in our LinkedIn account. Basically, it's simply just the performance of the A shares for the first half. So January 1st to June 30th. Obviously, Hong Kong has done very well. And in that chart, I also mentioned all the major indexes in China, A shares. Actually, the worst was in my opinion, the best index, which is CSI 300, which was 0.03%. And then the Zhongzheng 500, which is the next largest 500 companies, a little bit better. And the best performing index was Beizheng 50, that's BSE 50. Beijing Stock Exchange, right? That's the smallest. Yeah, it's almost like OTC, pink sheet type. And the year-to-date performance, the half-year performance was 39%. So a lot of speculation in the arena. And just to put this in perspective, in terms of market capitalization, these 50 companies, as percent of the entire Asia universe, is only 0.32%. So it's nothing, basically. So just by these little, figures, you get the picture that there's a lot of speculation for small companies, a lot of, telling stories, what's in fashion nowadays.
Yeah.
But the major company is not. While Hong Kong has done very well, big and small, okay? And the reason is, actually, we did not find any signs or evidence of foreign investor participation during this period.
In Beijing?
No, in Hong Kong.
In Hong Kong?
Yeah. Or was southbound Chinese money. Okay. Initially, it was more speculative money. Okay. And then the Chinese mutual funds raised funds from the individual investors, the fund investors. So they were southbound mutual funds investing. So the evidence is very clear. This rise in Hong Kong shares this year has all been participation from southbound money.
Okay. That's very interesting.
Now, is this sustainable? It's hard to tell because the initial portion of the money, these money are very fluid. right? They speculated that they can leave. They were, they're going to do what they were going to do. So it's not long-term money. Luckily, there's a portion of the money that's a bit more long-term. That's the Chinese mutual fund. Obviously, by doing that, they were hoping that the foreign participation is going to come, but there's no evidence of that for the first half. Yeah, no clear evidence. So what we expect for Asia for second half is clearly this Beijing, BSE 50. That's I'm short of calling a bubble. It's clearly there's no value share in there. Yeah. They are the smallest. I wouldn't even call it small cap. It's like a mini cap, micro cap type companies, and we feel the attention is clearly going to give to the CSI 300 of the world. We expect performance will be better. How much better? We don't have a gauge on. And there's a lot of attention on Asia's, and people are just waiting on the sideline to see.
Yeah, it was very interesting because I read your LinkedIn post actually, and you said normally when you have such a bubble in a small market, it suggests there's like a larger bubble. But if you look at evaluation of the Chinese mainland or Hong Kong stocks, there's certainly no bubble. The evaluation is historically still cheap.
Yeah.
So I think that one we can agree whether a lot of money is coming back from or further money from mainland to Hong Kong or also international investors. That's to be seen, I guess.
Yes, it's to be seen.
Yeah, maybe next time we talk, we probably know more.
Yes.
Already big thanks for sharing all these insights. I think it was really valuable. Guys, I put all the relevant links in the description below. Also, check out Xin's LinkedIn. It's very interesting. Follow him and all the other stuff. And of course, if you find this useful, then don't forget to, first of all, give this video a thumbs up, subscribe, and of course comment. Last time there was also a really good discussion which I enjoyed, and we also replied to most of your questions. So if you have any opinions on this video, or of course questions, then
please reach out.
Yeah,
very nice talking to you, and very nice talking to your audience.
Yeah. Okay, then see you next time, and
we talk again
for sure.
Yeah.
See ya.